I don't wanna go back. I'm just afraid that I lose you. I don't wanna hide.
And now, here to help you know your number and grow your number live, the Lost Dog Network presents One Lucky Dog with Tom Sosnoff, Scott Sheridan, and a little bit of soul.
Ooh, are you not wearing any pants?
Good morning.
Good morning.
Welcome to our show. This is One Lucky Dog. Our phone lines are open and ready to take your calls for the next hour at 989 Lost Dog.
We don't get a good morning from you?
I'm ready.
Okay.
I'm ready. Actually, I've been up for probably since.
7 hours.
Well, you know what? It's hard to go to sleep
After the game?
after the game last night, so I was
Yes.
kind of up late and then up early, and
That makes for a crabby Tom.
What
Let's
are the
go.
markets doing, Scott?
Well, a little better now than they were Friday or last night.
it's a better opening today than it was
Last
opening
night.
last night.
So we'll just start with silver because that's the one we've been talking about. And Friday it was up $7-8. Last night it closed 79.5 effectively. Friday it traded up to 82.70 yesterday when we opened. And I'm looking at this going, okay, is this thing going to 100? I just, as Tom says, the black tape over, closed my screen, and about an hour later I looked, and it was actually trading, excuse me,
Bless you.
about 75, 76. Right now it's down to 72. So hopefully that's the end of that move. Gold also had a very similar move. Gold was up 30, 40, right? Wasn't it?
I actually sold silver at 82 last night, which was pretty close to the high.
82.70
but I
was the
bought
high.
gold up.
Oh, you bought, you did the spread?
I did the gold silver ratio, so I bought
Excuse me.
twice as much gold, up 50 or 55, I don't remember exactly. But that thing came in almost $5 in less than an hour, like when they turn silver
Well,
around.
that happens when silver drops.
But now,
$7.
well, gold right now,
Well, gold's down 180, 190.
190 is one of the biggest down moves I've seen in gold.
Yeah.
Silver's just riding the gold
I'm
coattails.
actually surprised because I thought we'd get through this week and then get through the year and see, but whatever that move was, and gold didn't have the move that silver had. Gold went from 4,000 back to 44, 4,500.
45.50. Yeah.
45.50. So gold moved on that move, but silver went from 52 to 82.
Oh yeah, silver was out, and the rumors and all that. We're going to talk about it. We have a
Yeah,
bunch
we'll
of
get to
questions.
it. I
about
love when the rumors started coming out. That's when I started feeling better.
Oh yeah.
Right? When you start hearing the rumors of, oh my God, China's this and China's not doing that and it's going to whatever.
When you start hearing the talking heads on financial media start talking about
Why you gotta visit.
all the different fundamental reasons why silver's up there, I was like, Jeff had the TV on this morning in our studios, and I'm like, you got to turn this off. I can't listen to this.
Levi showed me the best meme. It said, only boomers are trading crypto. Now you got to be in silver. Like if you're trading crypto, you're a boomer.
Yeah.
So
Yeah. I am a little concerned about some other thing. I mean, this is a nice. I mean, silver is still $72.
I'm not. Yeah. It's not. It didn't.
I just want to
crash.
remind everybody where Scott started to get me short silver.
52 and a half.
My highest
Ay,
sale.
ay, ay.
My highest sale is 82. My lowest sale is 52.
Yeah, 52.
Yeah. So I don't know what my average is anymore, but I know I need the gold silver ratio back up around 66.
When is gold going to come down?
It
Well,
is
it's gold's
crashing.
down to 195. That's a big. That's a big
Crashing
move.
today.
I
It's like a
mean,
mini
if you
crash.
get gold back to 4,000 and silver back to 60,
Do you remember what it started the year? Gold?
well, I could tell you.
When it
Yes, I
went
could
up
tell you.
as soon
It was
as
2000.
January-
It was last year. It was I think
2000.
it was 2000.
That's what I'm saying. When
Yeah.
is it going to go back to a regular
not.
price?
Oh, it
Come
may.
on, that's
I mean, it may,
crazy.
but
It's not.
we'll see.
Anyway, we're happy to have you here for a short week, Monday, Tuesday, Wednesday this week. It's another weird holiday week. These
Weird.
5 day,
Yeah,
you
Christmas,
go,
and
weird.
Christmas and New Year's, they pop out of nowhere.
yeah,
Out of
these
nowhere.
5 day weekends are
Who needs
Oh yeah,
it?
that's bad for you.
5 day weekends tough for me.
Yeah.
But this is a live call-in show. We do it Monday, Tuesday, Wednesday, Thursday. This week it'll be Monday, Tuesday, Wednesday. 989 Lost Dog. You can ask us anything. You want to talk markets? We'll talk markets. You want to talk about your career path, jobs? You want to talk about everything we do here at Lost Dog? You want to talk about your business? Bring it on. All right, let's do it.
Let's do it.
Let's do
Anyway,
it.
we're going to start off with some questions from the Dog Pound, and then we will look forward to you calling in. Don't be shy.
Yes, call us with any question. All right, let's go. So letters from the Dog Pound. This is a good one. I have been researching delaying Social Security payouts. I believe from age 67, each year one delays collecting Social Security, they get 7% more. That beats money market funds, but buying the S&P would have generated even more. They say the break-even age is 78 to 82. What do you think about this as a strategy?
I'm assuming 78 to 82 is the break-even age.
That is the break-even.
If you wait.
Yeah, right. Right.
Right.
When can you start getting it? 65?
I don't remember 62.
No,
60.
I'm 62.
Oh,
No, I think it's 65.
I think it's, well, I mean,
Okay.
if I don't think I can, I
I
think
think it's earlier than 65.
Okay. I just would have a simple answer to this to say, if you don't need the money, if you can live without, if you could do what you need to do without it, then wait, because obviously more is better, especially if you're in good health. So 78 to 82 to me, that doesn't even seem old. So
Right.
personally, if you can, I would wait. If you can't, obviously, you need to take the money. Now, having said that, when you're saying managing it, if you're waiting, obviously the government's hoping that you don't make it to 78 to 82, and then that's, as being an insurance company, effectively what they are, then they're going to be paying less premium. So I'm still a few years away. I will try, and my guess is I will wait. At some point, how long can you wait? Don't you have to take it by some age?
I'm not sure. But, so
I mean, you probably do.
I wanted to check and make sure that this is actually correct. And I did. It's kind of hard to find all this because it's not really.
Government doesn't make it
You
easy.
mean
No,
as a
it's not
strategy?
a government thing. You can go to Reddit or, there's lots of different places you can, people have this is like an age-old discussion, should I take
Yeah,
it?
yeah.
What this guy was saying, and I think he's from everything that I could find, he's spot on. And basically, you end up, the math works with interest rates at, let's say 4%, if you're doing something risk-free. If you can wait, if you can wait, there's two things you have to do.
Wait and live.
If you have to wait and live.
You have to wait and live.
Yeah.
If you wait and die,
Yeah,
it
if you
wasn't
wait
a
and
good
die, it wasn't a good trade. If you
Right.
wait and live, it's a small winner. And it's a better
But it
return on money.
probably, obviously, it must become a much bigger winner. If you make it to 100, it's got to be a much bigger winner,
Yeah, if you make it to 100.
right?
But anyway, answering your question here, because I did try to research this, because it's not like, there's no recommendations from the Social Security Agency or anything like that. It looks like you are correct. And it looks like, based on all the information I could find online and from different people that, that have actually studied this stuff, it looks pretty accurate to me. And yeah, if you can wait a little bit and then live to 78 to 82, you make a little bit extra money. That's it.
good. Yeah, great.
Yeah. Again, if you want to talk about Social Security, please feel free to call in. I'm kind of in that wheelhouse, so I'm trying to.
Don't you get
Figure it
messages
out
from the
yourself?
government?
I haven't. I don't. If I do, I'd
You
probably
throw 'em
delete
away?
Yeah.
Yeah, because I would imagine they would send you something saying that you're eligible.
Yeah, they do. They do.
Okay.
I haven't gone that route yet. Anyway, here's the next one.
All right, this is a cute one. I must have watched every version of A Christmas Carol ever filmed this season. Ebenezer Scrooge is a self-described successful man of business, visits some sort of commodities board daily, collects rent and evicts tenants, yet gets in a pickle with 3 ghosts and his expired business partner. What advice would you have given him along the way in his career?
I'm just going with a T-shirt that I saw. Well, I've seen multiple times actually. It says "Mean people suck." So I'll leave it at that. That, listen. Go ahead, you jump in. I haven't seen. I don't know what this is, but I would love to see Scrooge.
You've never seen A Christmas
You've
Carol?
never seen A Christmas Carol?
No, I've never seen it.
Oh, it's a
But I would
great-
love to. I would love to see about the commodities going down, being on the board. Somebody sent me the clip of Robert Downey Jr. that one. And I'm
Oh,
like,
it's
that's
great.
an old one, but I said, it's so good.
The Robert Downey Jr.
It's so good.
It's one of my favorites.
Like, if you saw Scrooge down doing that, it'd be good.
I mean, if you had ever been on the floor of the Mercantile Exchange or knew
all
anybody that
Scrooges.
traded there, everything he said was spot on.
Yeah.
Yeah.
But I mean, since I lived in that world, I mean, I can laugh about it because it kind of hits home. If you had said that about the SIBO, I would have felt very differently. But
Well, and it's funny. I'll just tell a quick story. They're talking about how the image of traders in Chicago was just awful. Like every
it's
bat.
pretty right. It was pretty spot on.
Yeah, I'm
I
not saying
agree.
it wasn't deserved, but
Yeah.
it was bad. And there was a big difference between the three floors: the CBOE,
Oh, yeah.
the Board of Trade, and the Merc.
Well, the
So-
Merc were called the Merc Pigs.
So we had a bowling. We had a
yes.
bowling outing 100 years ago from the CBOE. It was Jews versus Gentiles. Okay, so
Wow.
yeah, I don't need to tell you who wins. When I show up, I'm the best bowler. I'm like looking for a ball, and I'm the best bowler on the Jewish side. And the Gentiles are pulling out their bowling bags, their bowling shirts, and I'm
shoes
going, "Oh
and
my God,
everything."
we're in trouble." So the
It
losing
reminded me of the Big Lebowski.
so the losing team, which was us,
Great movie.
we had to buy dinner. So we're at the Italian Village. We're sitting upstairs. It was obnoxious. It was just a brutal group of people. Brutal. And some guy stands up. I didn't know who the person was because they were in an equity. We were trading in the index. This guy stands up and says, "I'd like to make a toast to our employer." And he stands up and he yells, "To the Merc."
Oh.
And everybody yells, "To the Merc." And I looked at Tom, I said, "I thought all these guys were from the CBOE. He said, "They are, but they don't want people thinking worse of the CBOE, so they just yelled the Merc, like letting people think like we were from the CME.
Okay.
It was
well,
obnoxious. Anyway, A Christmas Carol, which is really a great movie.
It is.
But yeah, Ebenezer Scrooge he's like a bad person.
He's a really bad person.
Yeah, and I shouldn't say like a bad
But
person.
the self-described successful man of business, what were his businesses?
Oh, he was like a
Early hustler?
yeah, like a slumlord,
Oh, nice.
But yeah, I mean, I think this is just kind of classic. You kind of you get what you pay for type thing. No empathy. He was just a bad soul, and the argument here is, if you're good things happen to good people.
There you go. That's the advice you would have given him.
I do agree with that.
Yeah.
That's the advice. Good things happen to good people. All right, let's keep going. We got a bunch of stuff today and fun stuff.
All right. When the 1/3 rule of credit spreads is met on both sides, but credit amounts differ. For example, put side pays 180, call side pays 140. Is the rule to simply sell the richer side, favoring a put or call spread? Put or call credit spread? Or are there other filters or suggestions? Tom?
You must have
Scott.
research on this one.
I don't need to do research on this because I think I've been talking about this for 25 years. But so the 1/3 rule is something we came up with years ago, and this is what I love about the whole One Lucky Dog is that we mix in, business questions and life questions along with trading questions. But the 1/3 rule is something that we came up with a long time ago, that when you sell a credit spread, you'd like to collect about 1/3 of the width of strikes. It just gives you some kind of like ballpark context around what you're looking to collect as a credit. But sometimes, because of this thing called Skew, it's the way they price options. Sometimes calls are more expensive than puts. Like in silver and gold, for the last couple of weeks, calls were way more expensive than puts because all the risk was to the upside. It's where the market, Skew is how the market prices the velocity, the perception of the velocity of risk, or the future of the velocity of risk, what it thinks it to be. So, and in the indexes in different markets like that, puts are more expensive than calls. And because of that, the vertical spreads, the credit spreads, trade for different prices. Sometimes the call credit spreads are more expensive than the puts, and sometimes the put credit spreads are more expensive than calls. So the fact that one side pays $1.80 and the other side pays $1.40 just is skew. It doesn't reflect it reflects the perception of velocity of risk. It does not show you which direction the market thinks we're going in next. people always confuse skew with market direction, and it's not what it is. It's just pricing in risk. Prior to 1987, there was no pricing of risk. Basic calls versus puts. There was no option skew. Now there is. So now different sides are richer, different sides are cheaper, and it doesn't mean anything market direction wise. If you see the calls are cheaper than puts, it doesn't mean we're going higher. If you see the puts are cheaper than calls, it doesn't mean we're going lower. So don't think about it that way. Just sell both sides, or if you're bullish, just sell the put side. If you're bearish, just sell the call side. Or if you don't know, just sell both sides. But don't think that there's any edge because you're trying to read something into it.
Okay.
It's kind of classic. We get that question all the time. By the way, 989 Lost Dog. And we want this to be one of the most popular call-in shows. In addition to talking about emails and voicemails and stuff like that you send in to us.
All right, up next. So I am modeling an automated rolling strategy for short strangles. In some cases, the probability of profit is high, but the P50 seems low. Is a low P50 a red flag or a no-go? Just wondering if there is a strategic correlation or not.
Yeah, that's these are tough trading questions.
Yeah.
So POP stands for probability of profit. P50,
Which means a penny. It could be a penny. That right?
which is your statistical chance of making 1 penny.
Right.
P50 is another term that we came up with over the years, which is your probability of making 50% of max profit. So those two numbers are very different. POP, again, is the probability of making 1 penny at expiration. The P50 is the probability of making 50% of max profit at any time. Usually the P50 is significantly higher than the POP, but there are different situations and different kinds of strategies and different situations where you could end up with a really low P50. Now, because you have a low P50, does that mean that you should not make the trade or it's a no-go? And that's a call that you have to make, but the answer is, on its own, no, it doesn't mean that. There's no strategic correlation between go and no-go just because the P50 is low. Okay, sometimes you could find a strategy where it's just a very low chance of winning. And so you're going to have a low P50. It doesn't mean you shouldn't necessarily do it. It just
I
means
haven't looked at this for a butterfly, but I would imagine butterflies are very
butterfly's
low.
a perfect example.
Butterflies would be very low P50.
Yeah, you're going to have a really low P50 on a
Yep.
butterfly. You're going to have a low P50 if you buy an outright put or call.
Yeah.
All that kind of stuff. So anyway, just as a discussion here, don't get hung up on some of the, on some of the statistics and stuff like that you see on trading platforms, just the technology today. So like if you look at even, what's funny about this stuff is that even on like betting platforms now, they'll have, like, whoever thought, years ago you'd hear some announcer doing the color of, of a football game saying, there's a 8.2% chance of recovering an onside kick. There's chance of going for 2 here. There's a 22% chance of making it.
Well, it just shows you how much data has now taken over. And
Well, of
making
course,
decisions.
and you'll even see like the chances of, like on a certain bet, the chances of this person winning or this team winning is 32%, just based on the odds. Finally, they're converting
to math.
Numbers into odds.
What's math?
Into the math. We've been saying this, by the way, and promoting this for 25 years.
Yep.
It was just a matter of time when it all comes like full circle. But so for me, just if you don't take the time to understand the math behind all this, and it is just all a giant math equation, then you're going to slightly be a little bit disadvantaged.
Yeah.
Let's take a quick look and see, where the markets are before we go on to the next slide. But the S&Ps, this is the first down day.
In what seems like a really long time, actually since the Fed announcement, since they pulled back after the Fed, and then they rallied. So SPU's around 28 at 69.51. NASDAQ's down 160 at 25.
First down day in the
700.
NASDAQ. It's the first
Gold.
time that all kind of all markets.
It's a lot of red.
It's the first time that all the markets seem like they're down.
Yeah, gold's down 200, silver's down 5.
When was the last time you saw gold down 200? Silver being down $5 $5.60 doesn't mean anything.
It's
to
really
me.
silver's really down more than that because
I understand, but it still
because
doesn't mean anything.
It's a big move.
It's down when it was up on Friday, basically.
Correct. Bitcoin and Ethereum are not moving. Bitcoin's almost 88,000, and Ethereum's it's 29.45. Now bonds, again, for all the moves that we've had since the Fed announced them, bonds have not. I don't think they've had more than a point range. They've been right here. It seems like the high. I don't think they've made it to the 116 handle, have they?
They haven't. I think they might trade there this morning, but I'm
Okay,
not,
but close. So upper 115s to upper 114s. Are you still short 114 puts?
I'm sure it's the 114 puts.
You're not covering?
There's not much money to make in those things anymore, because I mean they've already killed all the juice. Now I mean volatility has been really jinky. I mean the VIX is up good today.
Yep.
But
Cash, but it's up $1.13 to 14.73. I mean that was low. In the 13 handle, we haven't been in the 13 handle in a while.
I'm trying to see what the futures are up. I don't know if I can't really
Dude, the
make it
VIX?
out of the screen. Yeah.
16.85 up 8 cents.
8 cents. So the futures haven't moved much.
Futures
but
haven't moved.
It's the first day the VIX has shown a little life, and I mean, but just as far as the markets go, it's tough. Last Friday was difficult because that's we were at that 21 DT going forward. There's
holiday,
triple
it was
witching holiday, the whole deal. Now we're in that danger zone. I was telling Scott over the weekend, I'm like, I've done this before because of the precious metals, the silver and stuff, and I'm like, I've done this before.
Me too.
And I cannot believe I'm going to do it again. That Christmas to New Year's butcher everything.
Yeah.
But silver saved us a little bit today. It's actually down 650 now, and gold's down 230. I can't figure out the gold silver ratio in my head, but I can't figure out the gold silver ratio in my head. But I'm trying to think how many times it goes. I can't think of it.
And I too, just because this is in my DNA, I just want to give just a quick heads up to everybody because we're coming into the end of the year. So for tax time, hopefully wherever you're trading, for sure if you're trading at Tasty, you received an email with the details of when you need to close trades if you want them closed and counted for 2025. The good news is almost everything's gone T+1, so you should be good to close things out tomorrow. But again, just check with your firm. Just make sure if there's anything that you do want to close for tax year for 2025.
I think that I'm more concerned this week is that it's going to be super thin.
Although, remember, half day before Christmas, full day, December 31st is a full day of trading. So you have 3 full days this week, but then I think the interesting day is going to be Friday.
Is Friday a full day?
Friday's a full day, and I think that's going to be, I believe it's a full day. I'm 99% sure it's a full day. But it's going to be an interesting day because you're going to have a lot of people who are still on vacation, so it's going to be a 4-day weekend. So talk about thin. Friday's going to be thin. First day of the year, we'll see how they come out of the gates with that one. But
okay, so before we go to some phone calls, we're just going to keep going for just one more second. Go ahead, Sol.
Okay. I'm concerned that too many young investors are going to confuse exchange-based sports betting with crypto or listed financial markets. Are you concerned that binary sports betting is a dangerous trend, or do you think it's the collateral cost of new age financial literacy?
I liked this email.
I'll jump in here. Okay, so sports betting, first of all, done through the way it's done now through the apps through the casinos is extremely predatory. I participate, but it is very predatory. And unfortunately, I think it's creating a lot of issues for the younger generation / investor. Having said that, pulling it into an exchange or exchange-like is going to make the markets infinitely better. So it will be a much better product if it is brought on to the exchanges. So I am completely in favor of it because we're not getting rid of it. I read a rather depressing article that said, talking about the younger generation, a lot of people in their late 20s, early 30s have given up on home ownership. They just say they can't afford it. They know they're never, or they think they're never going to be able to do it. So a lot of them are turning to exactly this riskier thing, saying, well, let me go out and spend money and have fun, and let me try to, use these riskier types of investments to make a lot of money, because the traditional just buy and hold, which I'm not saying I promote, but that approach isn't going to work for them. So sports betting in its current form, predatory, this I think will make it better.
First of all, let's be very clear about something about home ownership. I've been buying homes.
I don't want to talk about it.
In Chicago.
It's a sensitive subject.
I've been buying homes in Chicago since I got to this city in my early 20s.
And they don't move.
I have never made one penny. So home ownership in this city has not actually.
Yeah, but it's not that they're looking from an investment standpoint.
Right,
it's whether or
no.
not you can just, because there
I
is.
understand.
Just own
I got
anything.
it. I got it. I'm just
Yeah.
saying. I've never made a dime on home ownership. So this is, to me, is a really, I think the last sentence here is really interesting. Do you think that this is the collateral costs of new age financial literacy? And I'm going to say I agree with that. I do think that this is the collateral cost of new age financial literacy.
But wait a minute, let's be clear here. To me, collateral costs have the connotation that you're saying it's a negative. It's a bad thing that's happened. It's collateral damage. Are you saying that what we are seeing here
It
is
doesn't say
good?
the word, it says the collateral costs.
Okay, connotations, positive or negative?
Negative.
Negative. When you say collateral, that means it's unintended. You're saying, didn't think this, you could have upside. Go, wow, I didn't know that was going to happen. That was great. But typically you don't say collateral. So I think you think, because you always say technology is good and it lifts things up.
Yeah.
So I'm
I'm
assuming.
saying the same thing here.
Right.
So
That's why I wanted to be clear.
I'm going to go back to 2021 with the whole meme stock kind of, craziness.
You think that was good?
I do. I think the whole meme stock
Go ahead.
insanity.
This one we've never talked about, so I'm
well,
fast.
we've talked about it a lot. I just haven't talked about you on this.
Right, I want to hear about it. Why do you think that was good?
Because there is always a cost. There's a cost of change, and the meme stock explosion was a transformational movement in the world of financial literacy. And what happened was it introduced 20 or 30 young people to stock trading and crypto trading.
20s or 30, not 20 or 30 people.
20 or 30 million people
million.
to
Yeah.
the world of stock trading. Now, certain firms benefited more, like Robinhood and whatever else, but it changed the whole financial landscape. And it introduced people to a marketplace that eventually allowed marketplaces like event-based trading to become popular and to grow and to finance themselves. So the idea that there's always going to be some form of collateral damage anytime technology changes. But in the end, everything requires some form of transitional moment. And I think that in 2021 that happened with the meme stock, and you've seen it happen with other things in other marketplaces and stuff like that. In order to move forward, something has to happen. There has to be this transformational moment. And I think, that's a little bit about what's happening now with young investors. They're going through this really important transition from, I don't necessarily think it's home ownership, but they're going through this transition of, hey, I really am interested in finance and the technology, but I don't really feel like buying. I feel like stocks is old school, and this is my introduction. Crypto started it. I mean, that's one of the other aspects of it. Crypto started it, and now maybe event-based sports betting, whatever it is. I mean, I think it is a differentiator.
So I agree with the change and what came from it. I guess through my lens, because I lived through a lot of the negatives of the meme craze. So for me, it was a very painful period watching, first of all, a lot of people blow up. But also then we got brought into frivolous lawsuits. I saw the vilification.
Yeah, but you think about it from,
That's
that's
my
a very
lens.
personal
It's
thing.
my lens. That's
Yeah,
what I said.
sure.
My experience going through this was, a bit different, but I get it. And it did cause these things to happen. Now, I think we need to look back on this in the next 2, 3, 4, 5 years and see how these evolve, how they develop, and let's see if people are actually able to make money from participating in these markets.
Well, the markets will get better and the technology
that's why I
will
said
get
the
better.
markets-
But if you look back right now into the meme stock era in 2021, and you look back into the pandemic and then the meme stock era and all the people that brought onto, different trading platforms and what that did for crypto, what that did for, options and futures. I mean, it's there's not even an argument for the other side. It's been the basis of the explosion in the business.
But you're making the assumption that without the meme craze, we don't have the growth in retail I don't think you can just make that assumption. I think
It's the only thing you can point back to.
well, no, because business on the retail side was already exploding prior to that.
Not the
Again,
same.
you also stop for a second. You are missing a very key point here. During the meme craze, and part of the reason for the meme craze, there was COVID. There was nothing else to do. There was no sports. There was nothing else to
COVID
participate.
was the year before.
It was all part of this, and everything was shut down, and people were participating in trading, and people were jumping over trading because they were home. They weren't working or working from home, which to use means not
Look,
working.
part of the whole part of what happened in 2020 with the pandemic was people were home.
Right.
But that led to was massive growth in the world of derivatives, the world
Right,
of
which
whatever.
is that's my point.
But
to
it
say-
also led to massive growth in crypto, and in crypto trading, because that was the explosion in crypto trading. And then right after that, the meme stocks kind of capped everything off. That pushed everything over the top.
Okay.
It's a good thing. You can't look back at that and say, hey, it's anything but a good thing. And so I think right now we look at the technology, on
I think you're
exchange-based.
oversimplifying to say that it was
You
a
have
good
to
thing. but I-
oversimplify things. You're looking for
there
in
is a
history. You have to go
collateral.
back and look for
Trust,
there was
right?
transformational moments. That's
Okay,
what we're looking
but
at.
there was a lot of damage left in the wake. Let's move on.
Lonnie from Charlotte. Lonnie, what's up? I
Hello?
might have lost Lonnie.
Hello?
Hi. I have a question. I heard the latest statistic. It says that the average first-time home buyer age is now 59. And I want to know if this is a good time for young people to put down a down payment, or shall we just continue grinding and wait until we are 59, to start our first home purchase?
59, is that accurate?
I don't think 59 is
The median age of first-time home buyer is now 2025 is now, yeah.
Oh, I didn't know that. That sounds really old to me.
Sounds really old.
Yeah. 59 sounds
Yeah,
really old as the median age.
I thought first-time home buyers I thought it's moved into the upper 30s.
Yeah, that number sounds,
but-
I would check that number.
Yeah, but regardless, buying a home and owning a home is only good if you can afford to do it. I'm not meaning it. I don't mean that in the sense to say if you don't have the money, obviously you can't do it. But I remember somebody, I'm not going to say their name, but they really wanted to buy a home, a close friend of mine. They really wanted to buy a home, and it was right before 08, before the disaster, and when everybody could put money down for basically nothing. And they didn't have much money. And I'm like, why are you going to do this? They're like, because you can make a lot of money buying a home, and it's the American dream, et cetera, et cetera. And that person went completely upside down and wound up losing the home. So home ownership is great if it fits into your whole overall plan and you can afford to do it. If you can't, and unfortunately now rents are far outpacing home prices, so it is becoming extremely expensive. And I don't have a deaf ear to that. But again, I don't think it's as simple as to say that everybody needs to own a home or owning a home is the best thing. To Tom's point, if you're doing it from an investment standpoint, Chicago has not been a great area to own homes for the last 25, 30 years. Right. Now, if you're doing it for the security to know that your landlord isn't going to raise your rent or your landlord isn't going to not re-up your lease, those are very different answers.
59 still sounds high to me. Lonnie. Yeah. But listen, thanks so much for the call. Thank you. Appreciate it.
Thank you. Take care. Bye-bye.
Yeah, you know what? The home ownership debate is probably something going to go on forever. There's a whole movement now that says screw home ownership. It should be, renting gives you different things like more flexibility. It gives you
I think a large part of home ownership was that people wanted to know they own, because for most people, their home is their most expensive asset,
I
it's the most valuable
understand.
asset, and you want to be able to
Right.
leave something if you have children.
Right.
You want to say, look, I can leave something to my children that's got value.
Right.
Really? Do you buy a home because when you buy a home, when you're 29 years old or 39 years old, the last thing you're thinking of is, oh, I hope I'm leaving my kids home. You're not going to live there for, 7 years is like a long period of time.
Hello?
So you don't ever think about leaving something for your kid. I mean, you don't. When you're
Maybe you don't. But most
when
people
you're
do.
65 or 70, you're going to sit around going,
No,
okay.
you don't wait until you're 65.
When
to
you're
think what
25,
gonna
you're really
leave
thinking about
behind
leaving stuff for your kids before you even
children.
have kids.
Sure.
No, don't give me that. That's not
Okay,
garbage.
did you ever, before you had children, did you have life insurance?
No,
Once you had children, did you have life insurance?
Oh my God.
never.
Wow.
Okay, I'm not talking to you.
I've never bought life insurance once. Why would I ever buy life insurance? I'm self-insured. I mean, I'm just saying that's how I always.
Okay, so I didn't have life insurance until my wife was pregnant with our first, and then I'm like, I've got to buy term insurance because if I get hit by a bus the next
That's
day, I want to
right.
make sure they have a place to live. He
Yes,
can go
exactly
to
right.
college, and they can eat, et cetera, et cetera. That's the normal approach.
I wish you had come to me. I would have written the insurance policy for you.
Oh
This is the
God.
stupidest thing ever. I would have written that all day long. Yeah.
I still have a
Well,
fierce
we
left.
bought it for myself.
Right.
And for Andrew, of
Right,
course.
of course
Sure.
you do.
As soon
Right.
as we had Marina.
Right, because
Life insurance is
Because
free.
what if
You're not
something
buying.
happens?
You're not doing that for your daughter, and you're not doing it for your wife or your kids.
what was I doing for?
Just for yourself. It's just giving you peace of mind because the insurance companies don't pay you anyway. Good luck.
Yes, they do. Yes, they do.
Good luck. No, they
Okay.
don't.
Yes, they do.
Happy Monday.
I'm just telling you, it is. You kind of have to. You got to think through these things, okay? And let me tell you something about. I want to get back to the home ownership piece. There's when you start to think about the reason people used to say you got to buy a home is because they felt like the upside of the home. The whole reason for buying a home is because you thought the upside was some number.
No, that's not the entire reason.
Traditionally-
No, that
buys
is
a home
not
as an investment.
No, it's not the reason.
mean,
you want it for
very
security.
few
You
people.
want it so that you know you have a place that's yours. You
Yes.
don't have to worry that somebody's going to come in and say,
I'll
I'm-
rephrase it. I'll rephrase it.
Okay.
The
Right.
reason young people aren't that interested in buying a home right now
Yeah.
is because in many cases
They can't afford it.
They can't afford
Period.
it.
That's it.
in many cases
Yes.
they would rather buy Bitcoin than a home. Period.
Because they can't afford a home, and they're thinking
Also,
if I buy
Right.
Bitcoin and I make a ton of
They
money,
might-
I can buy
they
a home.
might
Ask them
eventually
what.
be able
Ask
to buy.
because
Yes.
Alex, because the math, okay, because we were talking about math before.
Yeah.
Because the math suggests
Yeah.
that if you buy Bitcoin, you have a much better chance of making a lot more money than if you buy a home.
Correct, and that's why they're going there.
Okay, I agree. That's
and let's say that Bitcoin goes to some crazy number and they make a lot of money. Are they going to buy a home? Probably.
That's it. That's right. You can make a lot of money.
But then they want to buy a home, but they can't afford it.
No, they want to buy whatever gives them the most upside. That's the
I
difference.
don't think they're that smart.
No.
They are.
You're giving them too much credit.
I think
Josh
they're-
from Chicago.
I think
Yeah.
they just can't.
Let's go to
Josh, what's up, man?
Scott, you don't need to see A Christmas Carol. All you have to do is talk to him every day. I mean, this is the Christmas Carol right there. You guys should redo the set, make it look like Seinfeld's, the diner at Seinfeld, and sit across from each other at a table. Couple corned beef sandwiches, some coleslaw, just bitching at each other because that's the setup.
I'm trying, Josh. It's hard. Can we just talk about the Bears for a second? Because we haven't talked about the Bears. Now, first of all, they lost last night, but I'm saying go Bears. Amazing game. Really, just as a fan of football, that was an amazing game. It was one of the, like, I'd say since the Kansas City, Buffalo, whatever, AFC Championship a couple years ago, where it was back and forth in the last 3 minutes, this was the most exciting football game I've seen.
Josh is
100%.
still Josh is still
Oh,
wants to
God,
know
here
why,
it comes.
Okay.
why Tyson Bagent isn't starting. Okay.
Oh, really? Is he still on the team?
Yeah, he's the backup quarterback. He makes $5 million a year. But Josh wants to know why he's not starting because he thinks he's got
'Cause
more
he's-
upside.
Please tell me you
Great.
still don't think he's got more upside.
No, I'm on the Caleb
Okay.
bus now, but
You're on the Caleb bus.
But-
I like it.
I'm on the Caleb bus. But Tyson is still very good.
Well, for
So,
$5 million
but
as a
the game-
backup.
I just want to be clear. I've been on the Caleb bus from day one.
Me too.
Yes, and I never got off
Well,
that
you've
bus.
been on a lot of buses over the years that some panned out, some didn't. So.
All right, that's fair.
But it was a great game.
Great game.
I watching it with my son, I felt for my dad because I used to scream at the TV. I mean, I still scream at the TV. But my son puts me to shame, like to the point where I'm like, you have to be quiet. They're going to evict us. But
Don't those kids have to go to bed?
Oh my God, they go to sleep after me.
Oh.
They get up after, yeah, whatever. But speaking of the Bears giving sports, it brings up a question I have, and pertaining to your software. So a lot of college athletes don't go pro, obviously.
Most.
99%.
I don't. Yeah. So do you think though that being a college athlete factors in to your worth as an employee?
I would say
Do you think that
100%.
experience?
I would say 100% because I think if you're a D1 college athlete, the work ethic, regardless of what sport it is, and I'm not going to pick on any sport in particular. I mean, most people think of football, basketball, but there's 50 college sports probably. I don't care what you're playing, the dedication that you have to have, the commitment to doing the routine to get stronger. When you watch, if you ever have the opportunity to watch some of these pros and even college athletes train and work out, how much effort they put into this. So for me, it shows what you have inside and what you're willing to commit to something. So if somebody came in, I've never interviewed that I know of. I don't think I've ever interviewed or hired a D1 college athlete, but to me, that would be a big plus.
I was a D1 college athlete.
You
I
were?
was a D1 college athlete. Yeah,
Really?
in Illinois. Yeah.
Yeah, and that's a perfect example of why I'm going to give you the exact opposite.
I knew this was
That
coming.
Scott just
I was
said.
going to bite my tongue.
That's exactly the reason I'm going to say what Scott just said is pure. It's absolutely ridiculous.
Oh,
and
Tom, you could tell Tom didn't get enough sleep last night.
no, I got a lot of sleep, but
Okay, so you're going to tell me that it's ridiculous for me to say that somebody puts, have you ever seen what they do
I
to
am
the
going
training?
to say that
Their time would have been better spent watching
no,
TikTok?
I'm not going to say that at all. What I'm going to say is that over the years,
Yeah.
okay, because we've hired a lot of people, and whether you're a great athlete, whether you're a D1 athlete, whether you're a professional athlete, it doesn't mean a single thing with respect to what your value is. I mean, great. So does that mean if you were in the military, if you're in the Marines, you should have more value? Does that mean if you should,
Why not? I think it's the
basically we're on a
work ethic.
mission.
We are, all of us.
The
but
answer
all-
is
Yeah.
that you cannot tell the difference between person A, person B, and person C if person A has never got off their freaking couch. If person B was a professional athlete,
Okay,
you have
that's
no
bullshit.
idea.
That's bullshit. And I would tell you, you would say to me, you put down a glass of white wine and a glass of red wine and cover my eyes. I couldn't tell the difference. I'll take that bet anytime
Well,
you want.
over the years-
I will bet you whatever you wanted. You give me three people, one that's sat on the couch their whole life, one that's done a little bit and one that's crushed it.
I have hired
I
a
agree
lot
with
of
Scott.
people over the years.
I've hired 50 times more people than you have, but go ahead.
Don't
That's
listen.
right.
And,
No, it's true.
And I've hired D1 athletes, professional athletes. We've hired professional athletes over the year. And I'm telling you, there is no difference whatsoever. You can hire a kid. It's the same thing with academics. Josh, if I hire somebody that has a PhD or somebody that has a master's degree in something like financial engineering or something, and for certain roles, it makes absolute difference. It happened on the trading floor. There would be some
Oh my
kids
God,
that
you
go,
seriously?
There's some
You
kids that can
talk
go
your
right out of
book.
high school.
You talk your
He's
book.
talking his book.
It is
He's talking his book
unbelievable
100%.
because I can tell you when you talk and you say, oh my God, this person has their PhD. They're so incredibly smart. They're so good at what they do.
They might be. But
Because you say they're so
it
smart
depends on the
because they
role.
have their PhD. Oh my God, you should try to learn from this
just
person.
said it like a couple shows ago.
Unbelievable.
You
Now
guys-
it makes no
you-
difference.
Yes,
So
you did.
what does make a difference? Because in
No,
my
I'm just saying. You're sitting there saying somebody because they're a D1 athlete.
what it shows is a commitment
Commitment to what?
to effort, to putting in the
So
effort.
does that mean we should
A
hire every
work
Marine?
ethic.
I didn't say that.
But I'm just
what
saying,
I said
does
is
that mean
that
we should
he
hire-
said, is it a differentiating factor? I said, for me, it would be.
Okay. I have seen over the years we've hired D1 athletes, professional athletes. We've also hired people that have had military back experience. We've also hired everything. There's no difference.
Okay.
Josh, I'm going to
Josh, there's a big
move
difference,
on.
and thank you for calling.
There
And
is
you're
a
a
big
perfect
difference.
example.
Oh,
Happy Happy holidays.
Oh, goodness. Happy holidays.
Oh, my.
Ciao for now.
Ciao for now.
Bye.
I'm going to say that we had a dog pound poll, and the question was meme stock mania a net plus for young investors? So far, we have 48% say yes and 52% say no.
And here comes Tom. 52% of the people have no idea what they're talking about.
52% of the people have no idea what they're talking about. Ralph from Charlotte. Hey, Ralph, what's up?
Well, I'll go with I don't know what I'm talking about. How's that?
There you go.
Hey, guys.
There you go. What's
I
up, man?
appreciate you guys having me on. I had a couple points that I just wanted to talk about. You were talking Social Security at the top of the show.
Yeah.
And I'm in the same boat. You know, and your friends are too. You know, you're all about the same age.
Yeah.
And giving some thought to this and getting a return, you know, you got to live long enough. But something that has come to mind is that you can continue to work, and draw Social Security. Now, the catch is, I think the number is 24,000. If for every $2 over 24,000, they penalize you $1 in what they pay you in Social Security.
24,000 of what in salary?
Yes, in earned income, in your take-home pay. Taxable income.
Okay,
so here's the strategy that I'm trying to verify right now, because my thought on this is, because of circumstances, you know, life.
Sure.
I've been divorced twice, so you know what happens there as the guy.
You're down to a quarter.
Yeah, you're down to a quarter. Yeah, you start with one, you go to
you're down to a quarter. If you do it again, you're down to an eighth.
Yeah, if you go next time you're down to 12.50.
Yeah, you're down to an eighth. You're 12 and a half. Don't do it. Then you're down to a teeny, and then you're crying.
Yeah. Kind of death by 1,000 cuts. All right. So the strategy that I'm thinking of doing, and I've got a friend who's also looking into this. He's got a few more dollars, so you know he can reference the financial gurus to find this out for a fact. But my thought is to continue working until I'm about 70, 73. That's kind of my target range.
Okay.
I absolutely love work. So let me preface this by that.
Sure, it's great.
Am I going to have to work? Yes, I feel that I am, to continue to living any kind of lifestyle whatsoever. I'm just now really getting back up on my feet, returning to the States. Tom, you and I have met. You answered my email the other day. Thank you for the 2 references. So that'll give a little bit of context to you. But if you can balance the amount of money that you're taxed on, and you can continue to tuck it away in a 401k, anything so that you kind of balance, you know, the amount over the 24k that you're going to be taxed on, and lose your benefit on, well, you can kind of double dip there for a little while.
Well, first of all, though, Ralph, you're limited as to what you can put into a 401k. And at some age, I don't know, at some age on a 401k, I know with an IRA, you can't contribute past some
I
age.
don't know.
So you got to be careful. Plus, it would be up to your employer unless you were self-employed. And then you could maybe, obviously, give yourself more room.
I'm a little confused by the penalty you're talking about with the earned income. I gotta research that a little bit more. Honestly, I haven't spent a lot of time. I just researched that one question, from earlier today. But Ralph, I'll check it out after the show. I'll do a little research.
Well, I think if you combine this with a business, a legitimate business, that you could literally erode all those taxes away, and so you could still tuck some away and still maintain your lifestyle. And that's kind of my goal, what I'm shooting for right now. But
all right.
Anyway,
thanks, Ralph.
Guys,
Thanks, Ralph.
Say thank you, guys. Let me call
appreciate
in.
it, man. Thank you.
Yep.
Yeah,
Appreciate it.
Thank you.
We're 989 Lost Dog. Please call in. We're still taking calls. We have 3 or 4 lines open. How about another letter from the dog pound
Sure.
first? Because we got a lot of stuff today.
Yes, we do. So what do you think about the gold-silver pairs trade? That is micro gold versus micro silver futures. Do you think pairs trades are the least risky or the best approach in this environment?
Well, we're a little happier today. Gold's down 204 right now at 43.48. Silver is down 636.
Let's take a look at the gold silver
70.82.
ratio right now.
While he's looking, the answer is clearly a pairs trade. Pairs trade meaning you buy one and you sell another.
Where's gold
So
right now?
gold's 43.48. Just say 43.50 and 70
43.48
and
divided by what?
70.88.
70.88.
What is it?
61.34.
Would it get down to 57?
Oh, no. It was in the 55. I did
55.
I did it under 56 last night.
Okay, so just so everybody's clear as to what Tom's talking about, you take one gold contract, you divide it by the silver contract, and that right now is 61-ish.
61.30.
It was
61
It was 100.
110.
110.
Yeah.
We were trading it a couple weeks ago in the 70s.
I started to put this on because I have it on a bunch. So to answer your question, I have this on a bunch. I started putting it on at 60, right around 66.
I thought we started in the 70s. Okay.
No, I started putting it on at 66. My lowest I did was 56.
56.
So I think I'm putting more on higher. So, my cost probably about 62. 63.
So my answer here is to say, do you think this is the best approach? If you're trading futures, obviously you could trade options and do spreads.
No. Micro gold, micro silver does not have options.
I'm just talking about in general with pairs.
I know, but
with
when you're
pairs
doing
here,
pairs
with
trades-
this one, with this trade, and you're doing futures, you're doing outrights.
Yeah.
While you do have, it is some protection, you need to be careful to understand in an outsized move like silver had, it's not giving you probably the protection that you think you have. Because again, silver up until this move, silver would move 50 cents to $1 in a day. $1 a move in silver was a huge move. It could move 30, 40 cents. It's moving dollars in minutes now. So this move is insane. And to watch a trade go from 100, the spread, the pairs trade, down to 55, can you think of another trade that's moved like that?
No,
Give me another
but that
pairs trade
took,
that's
that took
moved
all
like
year. In the last week, a $10 move in there on
$10 move.
a $10 move.
It's huge.
Yeah,
it's $1,000. That's $10,000 per one lot.
Well, here's why it's a big move. Let me explain a little differently, Scott. First of all, when you do pairs trades, you have to use futures. You can't really use options. And
I was commenting not to use it as a
No, I
pairs trade. I
understand.
say this is a less risky approach.
when you're doing, using whether micro contracts or the big contract, doesn't make a difference. The big contract, that move would be a $100,000 move on a one lot. On the smaller contracts, it's a $10,000 move. It's about 1/10 the size. But to answer your specific question here is, do you think pairs trades are the least risky? The answer is yes. Statistically, now this is just, I'm giving you the actual statistics from the CME. Statistically, you reduce your risk by 85%.
That's across the board. That's not in this move. You didn't reduce your risk by 85%.
Forget about gold, silver. All pairs trades, by definition, reduce risk by 85%. That's why the CME, if you were to get relief, and brokerage firms, retail firms don't give you relief, but professional firms do. If you were to get relief, they give you 85% relief because all pairs trades, by definition, have about an 85% reduction in risk. So yeah, they are the least risky. Sometimes they go crazy like now, but they're about 85% less risk than doing the outright. Is this the best approach in this environment? I think it is, because in this environment, when you really have no control over it, at least this gives you a little bit of control, and it also gives you a little bit of like a trade with a higher chance of reversion to the mean than a pure directional trade. So from a trading standpoint, yes, I to answer your questions, it is less risky, and I think it is the best approach in this environment. And we still have that trade on, and fingers crossed, arms crossed, legs crossed. I need the gold silver ratio about $5 higher, and I need silver about $10 lower. Kevin from Mississippi. Kevin, what's up, man?
Hey, guys. Good to hear from you.
Hey, good to hear from you. Thanks for calling in.
Yeah, no problem. I had a quick question about options trading.
Go ahead.
Yeah, so me and my significant other have both opened Tasty Bites accounts.
Okay.
And we read that really good book, The Unlucky Investor's Guide by Julia. It was a fantastic read.
Right.
Yep. Best book ever written on options.
Yeah, no, I really enjoyed it. But the question we had is, like, there's a variety of different mechanics you learn from that book that are harder to follow in smaller accounts.
Sure.
And so I was curious, which mechanics would you guys say you would view as gospel and more as suggestions when it comes to, like, smaller account sizes?
Well, anytime, everything's more difficult in a smaller account. It's just the nature, that's what happens with less capital. Everything becomes a little more difficult. But the even in a Tasty Bite size account, everything that kind of Julia outlined in that book is applicable. Now, there's going to be certain underlyings where you can't make certain types of adjustments because, like, for example, if you have spreads on, it's a little bit more difficult to adjust certain types of spreads than it is to adjust, for example, naked options. But general premise, most important stuff to kind of take away from that book are obviously the mechanics throughout, but also underlying theme, which is, stay small and spread the risk around into as many, non-correlated underlyings or as many different underlyings as you can, because that's your easiest way to reduce risk and figure out, what you're doing, what you have on, and what you actually like to do. Like, what you have to do right now with a smaller account is learn what you like, learn what works for you, learn what makes you feel most comfortable. And I think if you stay small, stay non-correlated, and just spread your stuff around a little bit, and by spreading around means different strategies and different underlyings and potentially different product mix. And then as you start to grow your account and as you start to build some wealth and build some account size, everything in that book is never going to go, like, it's going to apply to any underlying in any marketplace, and it's never going to go out of style. I mean, it's going to be, that book's going to be like the Bible forever when it comes to, trading. Nothing's ever going to change.
Fantastic.
It's just math. That book is math from start to finish.
Yeah, no, it was excellent. But thank you so much.
Yeah, I mean, she's a physicist, and she's just, her brain works just, she's math driven.
No, I come from computer science myself. It was, it was wonderful.
Yeah, I I begged her to write that book, and because I knew I couldn't do it, and she did a great job. All right, hey Kevin, thanks so much, man. Good luck.
Yeah, thank you. Take care. Bye.
Bye-bye.
Yeah, so we have we have one more letter from the dog pound.
Sure.
Yeah, got some time. Go ahead.
Okay. So I am considering entrepreneurship, and I'm wondering how you knew when you were ready to go out on your own. How do you find the people to help you build these fantastic ideas and make them official? Lately, I'm pissed off at companies telling me I'm not good enough during interviews, even though I've done amazing things.
That's fair.
That is fair.
So I've always worked for myself, and so I can't say when the time was right. I was offered a job, and I turned it down out of college. I was in real estate, and I just didn't want to go into real estate. I grew up in a real estate family, and I saw what it was. I'm like, I don't want to do that, and I just immediately went off on my own. So I can't tell you when it is that when I had the time to make the leap. I think internally, just in my life, I've known when it's been time to do certain things. It just feels natural. If you feel like you're pushing on a string, it's not the right time. So if you have the opportunity, if you have the idea, you have the financial wherewithal to get it going, and you have the people. And when I say the people, how do you know if you have the right people? Like Tom and I, when we met, I was just telling somebody the story, about how we met and when we met. I had no idea we were going to meet, and it just turned out that this was the person that I was going to walk down this path with. So, and we've had a very successful, 37, 38 years together. So for me, it's more about the timing of, do you feel you can go do this, and is this the right thing? Can you afford to do it? If you can afford to do it, and affording is not just the money, but it's the time, your responsibility, et cetera, I would tell you to go ahead and do it, and screw the people that tell you that you're not good enough in the interviews, because they don't know enough about you.
Yeah, I mean, I always think you need a little experience before you're totally ready to go off on your own. But to be fair, I mean, I pretty much went off on my own right out of college.
Yep.
I mean, I got one job and then I left after
3 days.
6 months or 7 months, and came to Chicago and said, screw it. And so I don't know. I mean, I think you're ready on day one. And how do you find people? Well, sometimes you find people, and sometimes you don't. The challenge, and sometimes you fly solo. But the challenge with finding people to help you build ideas is when you start out really young and you don't have a lot of experience and you don't have any track record, then it's kind of a little more difficult to get people to believe in your ideas. I'm sure, they believe you're smart and all that kind of stuff, but to actually invest in you is that's a tough one. And companies telling you you're not good enough, I mean, that's the most ridiculous thing.
Screw them.
Yeah, screw them. Just say, like
You don't want to be there.
Yeah.
Yeah, don't do me any favors, thank you.
I don't want to be at the club that doesn't want me.
That's right.
Whatever that
Or
was.
Groucho Marx. Do I want to be a member of a club that would have me?
Yeah, right. I mean, I'm a screw you type person. Like if I'm not good enough, all right, good. I mean, and it also gives you some bulletin board stuff. It gives you something to prove, and it gives you that kind of like that energy. I'm a screw it. Just doesn't make any difference.
For sure.
Just
All right,
go for it.
Before we wrap up with the markets, we have one more call. Why don't we just take one more call? I'm assuming this is Iz from Milwaukee. IZZ.
Hello, guys.
Hey, Iz, what's going on, man?
Hey, Iz.
This is from Milwaukee. Yeah, so I know it's towards the end of the show, so I'll keep it.
No, don't worry about it. Go ahead. We own this network.
Okay.
We're good.
So I'm an electrical engineer from the Milwaukee School of Engineering.
Okay.
I've been working in the industry for about 10 years.
Okay.
I work for a big automation company, but I've been analyzing to see if, changing fields a little bit. And one of the fields I've been thinking about, it's obviously financial engineering. So I have a couple paths that I'm considering. The one is to keep on doing power electronics, type of engineering, hardware-related stuff, or moving into more of coding, Python. So I've done a lot of stuff on my own, and I have my own system, trading system. I created my own algorithm. I created, pull data from Pinbase. I've done some back testing multiple times, multiple iterations and all that stuff.
Sure.
But yeah, I guess what kind of advice or what kind of projects you
Well, it sounds
think
like
would be...
sounds like you love markets, which is cool. And I will tell you, financial engineering, there is a huge demand for people with advanced degrees, whether those are master's degrees or even taking another level, doctorate degrees in financial engineering. There are not that many people out there with that degree type. In fact, there's not that many universities that actually support, financial engineering degrees. So if you're asking me, is that a strong line item on your resume? The answer is yes. That's worth a lot of money. It's probably going to get you, a lot of interesting, interviews and opportunities because there's just not a lot of people with advanced degrees in financial engineering. And if it's something you love and you can throw in the coding side to it and a few other things, that's awesome. But just that specific path is very strong.
I would add to that probably the hardest role that we had to fill, that we were trying to fill at Tasty, were people who could code for our risk margins world, because it is such a niche business. And if you understand it, so if you're looking at the markets, you want to use your coding and you want the opportunities, while there aren't a lot, because there aren't that many firms that need it, but the firms that need it desperately need it. So if that's something that you're interested in and the markets are where you want to be, and risk margin is of interest to you and you can code, there is absolutely tremendous opportunities for you in that area.
And I think since you're in Milwaukee is, in Chicago, virtually every high frequency firm in Chicago,
Yep.
which,
A lot of them.
every major player is basically in Chicago, and every one of those players, that is what they're looking for.
That's it.
That is the degree they're looking for. And if you're talking about, those are the highest paying jobs in the whole world of finance.
Yep.
If you're good, let's pay. The numbers are ridiculous.
Yeah, if you're willing to move, whatever, 70, 60, 70 miles south.
So if it helps, and if you're interested in kind of the high frequency prop business, the jobs are hard to get, but if you get them, and with that degree, you certainly have a possibility of it.
Many people actually commute from Milwaukee.
Yeah.
There's a train.
There
It's
is
not
a train.
bad.
Yeah.
I mean, it's just
pretty
almost
bad.
like a Chicago suburb. No, it's not bad.
Yeah.
And I actually already work in Illinois, so it's
Oh, okay.
Oh, perfect.
Yeah.
not a problem. But yeah, I guess I was just considering that because it involves getting an additional degree and moving away from
Yeah.
hardware. So it's a little bit of a. But
Well,
I
I
definitely
think the
love the
software
market.
side. I think the software side has if you're interested in finance, the software side has a lot of upside.
A lot.
No,
So-
absolutely.
All right.
So,
It is
okay,
good.
well,
Yeah,
appreciate
good
it.
luck.
All right, take care, man.
Thank you for the call. Good luck.
Thank you very much.
All right, so we're going to finish up with just quick rundown of the markets. Really not much has moved since we started. SPOO's down 30, NASDAQ down 166, gold down 202, silver down 580, Bitcoin up 105, Ethereum is up $4, 10-year barely moved, and the 30-year has come down just a couple ticks. It's 115.24. Probably the biggest down moves on the board right now. Let's look at this. You got Meta down 550. You got Nvidia down 370. VIX up 111, and that's our Monday. So
Yeah, we left a few people on hold. Sorry about that, and we left a couple of questions about pairs trading.
we'll try to get back
We'll
to
get
it.
those We'll get those chatted out
maybe.
tomorrow.
Yeah.
So thank you for your calls. Thank you for listening. Happy Monday, and we will
Remember,
hopefully
this week is
short week, Monday, Tuesday,
Wednesday, 9 to 10 Central, 989 Lost Dog.
Happy Monday. See you
Happy
tomorrow.
Monday.